I would just like to take you now through the financial requirement for this application. So all applicants must meet a financial requirement in the form of an income requirement. So this means that you have to evidence funds of £18,600 to satisfy this. And as you can see on screen, for the first additional child, it's an additional £3,800, and then for every additional child after that is £2,400 to satisfy this requirement. If the minimum income requirement cannot be met, for example, if you have employment, the 18,600 cannot be satisfied, you can use cash savings above 16,000 in combination with this to satisfy the requirement. We've listed some situations where cash savings cannot be. So, for example, as you see, the self-employment, income from employment as a director, and gross income received for 12-month period where a person has been employed with current employer. If we could just move over to the next slide, where we'll explore this requirement in further detail.
Income can come from a variety of sources, and we've set those out here. Most sort of straightforward is the salaried or non-salaried income of the partner. That's the person in the UK who the applicant is joining. Part B is non-employment income, and the kind of thing that we typically see in that instance is income from property rental or dividends from shares. So in the event that somebody has a prolific share portfolio and they draw a dividend from particular companies, that's the kind of thing that can be borne in mind here. Separately, state or occupational or private pensions. So where the applicant or their partner has a particularly lucrative pension and it is of pensionable age, then that's an alternative requirement. And that's basically acknowledging the fact that where somebody is at a pensionable age, most likely they will not be in full or even part-time employment. So it's an alternative presentation to them specific to their demographic. Part D is income from self-employment, again of the partner, so that's the individual in the UK who is being joined. Income from self-employment is absolutely something on which you can rely. It's just important to be aware that when it comes to the mandatory evidence, that really is very multifaceted. So the kind of documents the Home Office want to see really are very involved, and it even varies dependent on whether somebody is self-employed in a sole trader capacity or as the director of a company, then the specific mandatory documents will vary. So I would just say self-employment absolutely can be relied upon. It just becomes rather nuanced in terms of the evidence that needs to be provided. And then cash savings of the partner or the applicant can be borne in mind. They have to be held at a consistent level for at least 6 months. And when we say under their control, we mean typically in a bank statement, as a bank account rather, that is in their name. So where you've got savings over 16,000, you can combine that with income to meet the overall minimum income level. Where if someone is fortunate enough to have savings of, I believe it's £62,500 just sitting around, people can rely on that alone to meet the income requirement for a single applicant. So if you were applying for your civil partner to join you in the UK and you had, let's say, capital of £70,000 that you had in a savings account in your name, and you'd held that consistently for 6 months, let's just say it was related to the sale of property or a similar asset, then a bank statement covering that full 6-month period would serve to meet that requirement. So capital, when it comes to application logistics, it's always a good one to rely upon because the documentary requirements are really quite straightforward. It would just be that bank statement covering the 6 months and being no less than a month old on the date of application submission, and perhaps some ancillary documents to show where that money came from. The Home Office does want to understand concerned. You know, if someone just gets a random lump sum into their bank account, sometimes I think that they can be concerned that that money might have been, you know, donated by a family member to facilitate the application and might not actually be retained by the applicants. So they just want something to understand where the money came from. So moving to the next slide, we just got a few examples to try to lend a little bit of color to the information. I appreciate it's somewhat in a vacuum, so hopefully a little bit more detail here. Let's say an applicant's partner is based in Australia, but returning to the UK to work. So this was one of the questions within the chat. Hopefully this will help illustrate that. You've got the applicant, so let's say in this instance they're an Australian national for ease, a British national, the applicant's partner moved to Australia, met, fell in love with the Australian national, and the two of them decide they want to relocate back to the UK together. The applicant's partner has been working with the same employer for at least 5 years in Australia, earning a good gross salary there. Critically, the applicant's partner, i.e. the British national in this particular scenario, has a confirmed job offer in the UK to start within 8 weeks of their return with, again, a good annual salary. Therefore, the applicant's partner will meet both the current salary requirement and a future salary requirement to meet the financial requirement under category A. So category A being that income from salaried employment of the partner. So where you have this particular scenario, the requirement of 18,600 must be met in the country in which the applicants are based, i.e. Australia, and the partner, the British national in this instance, must be going back to the UK into a job that also commands a salary at 18,600. So because in this instance, they are currently earning that much and have been doing so for 5 years, they will be going back to the UK, and then within 3 months of their arrival, they will have a job that commands that same salary. They meet this requirement. Specific to one of the questions in the chat, let's say in this example A, we changed the facts a little bit. So it wasn't the British national that was working in Australia and coming back to a secure job offer. If it were the Australian national applicant themselves, unfortunately, the situation would not work. It has to be the British family member upon whom the application is based. It's that individual that must be working and coming back to a job in the UK. Example B, the applicant's partner is in the UK, recently had a baby, returning from maternity leave. So maternity leave can make things a little bit tricky. She has a contracted salary it's a good salary. It's in excess of the 18,600. Been with her current employer for at least 2 years. She's not been earning the required level for all of the last 6 months because she's been on mat leave, but that's okay because the period to be assessed could be the 6 months before she began her mat leave. And because she'd been working for them for 2 years and earning that good salary for that 2-year period, if we look at the 6 months before she went on mat leave, she will meet the minimum income requirement for her partner to come to the UK. So if, for example, the Home Office were to say, no, we're only going to consider the income you got on maternity leave, and that had dropped to quite a low amount for whatever reason, that's a very nuanced area depending on your tenure with your employer, etc. But they would effectively be discriminating against women having children. Obviously, they cannot do that. The Equalities Act 2010 prohibits that. So there's a special allowance to look at the 6 months before the individual went on maternity leave. So in this instance, the minimum income requirement would be met.